JP Morgan CEO Jamie Dimon just issued a 61-page letter to investors issuing a stark warning on the state of the U.S. economy, saying that inflation might last longer than estimated and interest rates might stay higher for longer. There's a lot of political polarization in the U.S. and geopolitical risks not seen since World War II. So those are the negatives that Jamie Dimon said. However, he also said that AI will be transformational and be an invention like the printing press and steam engine. And I kind of agree with him. And I agree with him in the sense that the tailwinds of AI and technology will outweigh the negatives of political polarization, geopolitics, and inflation. Obviously, we have to see. But market bull and market researcher Ed Yardeni says there's a 60% chance that we'll experience a roaring 2020 scenario like the 1920s, 20% scenario like the 1970s with the double inflation spike, and 20% chance of a 1990s boom. Obviously, we have to see, but I kind of agree with Ed Yardeni. But I think that there's an even chance between a 1920s market boom and a 1990s boom. They're kind of similar. Look, there's a chance that inflation might reaccelerate again and we could have kind of like a 1970s oil spike situation, but I think the greater chances are either a 1920s boom or 1990s internet and tech kind of boom. Obviously, we have to see. This week we have inflation, the CPI inflation reading coming out on Wednesday, and then Thursday we have the PPI inflation. But honestly, what's more important than the inflation readings is the 10-year bond yields. Right now, the 10-year bond is yielding close to 4.5%, which could potentially drag on stocks. So this is something we have to keep an eye on. Perhaps the 10-year bond yield might be even, and how the 10-year bond yield reacts to Wednesday's CPI inflation reading and Thursday's PPI inflation reading. I think the 10-year bond yield's reaction to those inflation readings is more important than the inflation readings themselves in terms of how the stock market will react. So there's a lot of economic data this week in the short term, but then in the longer term, although Jamie Dimon had some negatives about the economy, the strength that he mentioned about AI and Ed Yardeni's comparisons to the roaring 1920s and the 1990s, I think rings true more for the markets and the economy right now and for the rest of this decade.